Hey everyone, Mortgage Nerd here. So there's a lot of issues going on right now when it comes to second homes. Those are vacation properties. So you own your primary residence and then you want to have a property on the beach, in the Keys, in the mountains, near Disney, whatever the case may be. Maybe you live in South Florida and you work in New York. So you need a second home in New York because your kids and family are down here in South Florida, but you fly up there a couple weeks every month. Whatever the case may be, that's what a second home is. So right now we're in a place where Fannie Mae and Freddie Mac have said second homes are going to be more expensive. They basically raised the rate. To get the same rate you would have gotten before, you'd have to pay 4 points. That's 4% more of your loan amount. So if the loan amount's $400,000, you're going to pay $16,000 extra closing costs, or you raise your rate. So basically that rate has gone up to the high fours, and you're usually going to pay points on top of that anyway. So this is the same interest rate as investment properties, when before the second home used to be the same interest rate as your primary residence, because it's your primary, but secondary, it's somewhere else, so it's not an investment property. Why are they charging these high rates? Well, it is what it is. It's what exists right now. I had someone who works at another mortgage company, also a loan officer, call me because he saw me talk about our lower rates for second home. So it's actually a jumbo mortgage that we have, but it's not only for jumbo. What's jumbo? Jumbo is 647 and above. Loan amount, depending on your area, could be over 970. So let's say $1 million, $2 million loan amounts. Those are jumbo. That's why they're called jumbo, because they're much larger than your conventional, your typical amounts, right? So those rates for jumbo can also be used on lower loan amounts, whether it's $500,000, $300,000, it doesn't matter. So right now I just quoted someone as a 3% rate with a 3.13 APR. Now it's not a fixed rate for 30 years, it's a fixed rate for 10 years. So as opposed to getting a conventional loan where the rate is going to be in the high fours that I just mentioned plus points, which is the 5.03 APR, that's really high. But remember, that's a 30-year fixed. So with the jumbo product, instead of paying such a high rate plus points, you're going to pay a much lower rate. And then you're going to have a fixed rate for 10 years. After 10 years, it'll adjust once a year, meaning it'll go up or down once a year after that. What's happened in the economy is we've become addicted to the stimulus. So every time there's a recession or a pending recession or something crazy like the pandemic, the Fed prints a bunch of money, they lower the interest rates, and this causes fixed rate mortgages to also go down. Now that they've gone down to the twos, they will go back to the twos. So anybody getting a rate anywhere in the fours, fives, sixes, wherever this ends up, just give it a few years and there'll be a recession and the rates will come back down. That's when you refinance to save money. But if you wait for those rates to come back, the property values will likely be higher and you're gonna miss out on a lot. I do have calculators on the cost of waiting, which I'd be happy to produce for anybody. Getting back to the second home issue, we have a solution. It's a much lower interest rate. Now it is much stricter to qualify. On the conventional, you put 10% down. On this product, you're gonna put 20% down. You do need to have money in reserves. That means not money in retirement, but you need to have money in an account that has liquid funds to supplement any losses in income. You need 6 months PITI, that's principal, interest, taxes, and insurance. You need to have enough money in that account to cover 6 months of your primary home payment and your secondary home payment. So there's other stipulations as well. It's not as easy to qualify as conventional, but hey, if you save 1.75% or 2% a year, what's 2% of $400,000? That's $8,000 a year. In 10 years, that's $80,000 that you'll save in interest by having this lower product. And of course, we'll find a time to refinance you out of the adjustable rate into a longer fixed rate term whenever the time comes. If you need any more information, maybe you're not in Florida and Texas, which are my states, I'd be happy to refer you to someone else that can offer the same program as well. Mortgage Nerd out.